Episode 563, Trading Justice Podcast. The week of weeks coming at us. Now, Matt, you and I like to joke, who needs the Kardashians, who needs reality TV when we have the markets, right?
Very accurate.
How you doing, brother?
Doing good. Excited to be with the crew to break down all the market activity this week. And we're going to rapid fire the market activity this week because from fundamental earnings to economically to central bank to themes, you just got everything this week. It's a big week economically with labor market news. Think about it like this, Chucky. Labor market news itself is a big week. Just that
it's huge. It can take a whole week over.
Right? That's a big week. But then you get the central bank, you get PMI industrial reports, you get consumer reports economically, you get the obviously monetary policy from a fundamental perspective economically. And then you have on top of that, you got 107 companies within the S&P 500 that are reporting earnings that represent the vast majority of all the growth that happens in the market because it is the week of weeks from an earnings perspective.
Why do we like to do this, Matt? Why do we like to make it? Because I'm already hearing market commentators, oh my gosh, it is the most important week. Why do we like to do this? Is it just a little bit of sensationalism? Is it what is it?
Well, I mean, first and foremost, we're always going to try to create a little bit of drama in the market. You started the podcast talking about how the market likes drama, but the simple reality is when you get this many events that can create catalyst events that could spark not just buying in a day, but could create trends, it's just going to be an all eyes moment. So whether you're a fundamental investor and it's a big earnings conversation this week, or whether you're a technical trader and you're just looking at the market from an overextended perspective and really wanting to get that overextended backdrop of the market getting dialed in a little bit, or whether you're the news-based trader. If you're a news-based trader, you're going to be very, very busy this week. And so it's every time frame of trader, every style of trader, every economic fundamental technical analyst out there, every single individual, however they like to navigate the financial world, they got something for them this week.
Yeah, needless to say, no doubt it is going to be a big week. Where would you like to start? Where we're at or where we're going?
Wherever you want to go, bro. You point, I turn.
Let's go with where we're at. One of the things that last week on the podcast, for those that listened, about the crabbiest I've heard you on earnings in a long time, many, many years. I have to think. I don't know if I've ever heard you as crabby on earnings on this podcast, to be honest.
I would say against expectations. And again, it's never just one thing when I'm evaluating earnings season. I have a different perspective if the market's at a low point versus if the market's at a high point. But I would say in general, this is the worst earnings season since the second quarter of 2020.
Yeah, and so, we had a whole bunch of companies. Now
and again, I want to be clear, based on expectation.
And we got
broad numbers, but based on expectations.
We got a whole bunch of companies reporting this week, something like 40% of the S&P 500. So obviously stories can change, but we had a good chunk this last week. How was it? Where does that earnings picture stand as we head into the week?
Well, if you ever want to get a specific earnings analysis on, a stock in the market, I obviously do that every day in the halftime report during earnings season. But in the podcast, we just like to take it from a macro perspective. And so from the lay of the land perspective here, Mark, last week we were sitting at a pretty rough start to earnings season, and we have improved, but we have improved very, very, very minor. And so I think I gave it a D+ ranking last week. I would still be there, Mark. I think we've had a really rough start to earnings. We have 25% of the S&P 500 have reported their earnings so far. We get another 25% this week. I think 107 S&P 500 components. So at the end of this week, we'll have a majority, slightly more than a majority of the market that has reported earnings so far. And so we're starting to get into the middle area of earnings season. And right now we got 69% beats, which is underneath the 5-year average of 77% EPS beats, underneath the 10-year average of 74% EPS beats. You also have revenue coming in at 68% right now, which is anytime you get revenue in the upper 60s to low 70s, that's going to be perfectly fine. There's not really a revenue concern right now. This earnings season has been more about the EPS, not even necessarily the EPS misses, right? 31% of companies have missed the EPS expectation, but it's really about the percentage beat, Mark. We're dealing with 69% of the market that is beating the EPS expectation. Again, that's underneath the 5-year average of 77%. But the problem is, I talk about this all the time in the halftime report. The problem is, how big of beats are you getting out there? Remember, the expectations are low bar expectations going into this earnings season. And so it should be easily to overcome those low bar earnings expectations by the S&P 500, but you're seeing a negative 5% miss against the expectation right now. So yeah, you have 69% of companies beating the EPS, but they're not beating with any degree of veracity right now. You're seeing basically slight beats, big misses, and the market's rewarding everybody.
We're not getting that handful of, oh my gosh, look at that beat, like, at all, are we?
I think you've had 2 hat tricks so far on the year. That's nothing. You really haven't had any hat tricks out there. You've had a couple companies. Netflix was the catalyst stock, obviously. They reported earnings a week and a half ago, and they were very good. They provided a lot of leadership for the communication space. They were a standout. Taiwan Semiconductor a week and a half ago, they were a standout. But off the top of my head, Mark, you don't have a lot of standout reports. And even on Netflix, Mark, you weren't dealing with a hat trick on Netflix. You actually missed against the EPS expectation. EPS was 220. Netflix came in at 211. That was a miss. That's a 5% miss against expectation. That's right where the market is. And yet Netflix up. Why? Because subscriber beat. And so Netflix was a catalyst-driven stock, but it wasn't because of a knock your socks off EPS revenue beat. It's because of subscriber beat and what that can lead to down the road. You look at Taiwan Semiconductor; they were a catalyst-driven stock. They had I would say a good earnings report. But Mark, it was not a knock your socks off beat out of Taiwan Semiconductor either. It was more what it meant down the road for AI and the semiconductor components and that growth area of the market. And so there was a lot of, ooh, what are you going to do for us down the road with Taiwan Semiconductor? What are you going to do for us down the road with Netflix? And it's almost like it's that energy conversation. Hey, we don't like energy right now, but we might like energy a heck of a lot more if crude oil starts doing good, because we know what energy is going to do down the road. And so I don't think this earnings season has been a good one in any capacity so far. And again, it's still early, Mark. We only have 25% of the market that is reported earnings, but of that 25%, it's been a rough start. I would still give it a D plus. And the reason I would give it a D plus, despite blended growth improving to negative 1.4%, blended growth is still a negative 1.4%. Despite the EPS beats going from 62% to 69%, yes, that's an improving condition, but you're not seeing the veracity of those beats move up. And so I would still give it a D plus. And that sets the stage, Mark, for what is going to be a rock star week from an earnings perspective. Once again, just looking at the landscape coming at us from an earnings perspective.
No, let's get to that in a second when we do the week before. I want to hit a point here, and I think this is the point of the podcast this week, and it's something that you alluded to last week, and I can't even remember if it was private conversations around the halftime report at this point, but you brought it up again when we were chatting before we started the podcast, and it's this. You told me that the forward PE was what right now in the S&P 500?
The forward PE ratio in the S&P 500 is a 20 handle right now.
All right, so
in general,
high valuation.
I'll just say this. in general, right now, with where the economy is, where the growth is, where the inflation is, where the market is, with everything we got coming down the road in 2024, a 20 handle on the forward PE ratio is not the appropriate valuation for this marketplace.
Yeah, and this is the point coming
18, maybe 18. Yes, I'm good at 18. I think 20 is a little bit too elevated.
And that sets the stage. And
something very quickly.
Yeah, of course.
Okay. When I say 20, that's when you're talking about the entire S&P 500. When you're looking at an individual component, 18 to 20 is nothing. When you add up 500 different companies, 20 to 18 is the difference between a short-term bear downtrend and the market stabilization.
Yeah, no, and this is the point for me that I'm going to take away from the podcast this week is that at that valuation level, you do not have much room to work if anything pops up that causes anxiety, do you?
I think the market's priced for perfection right now.
Yeah, and price perfection tends to lead to corrections. Not end of the world, not, oh my gosh, the market's collapsing, but it does tend to lead to corrections, especially if, and it can even be technical, Matt. Market tops out, gets tired. Certainly if anything happens. I mean, that's where we're kind of at right now if we don't improve these numbers, isn't it?
Yeah, but I think that's why the importance of this week matters, because Mark, when you look into account, when you look at the names that are reporting this week, let's go to FinViz here, Chucky, and let's look at some of the names that are reporting earnings here this week. And so you go to the screener here, and I'm going to go to the earnings date, and we're just going to look at the companies that are reporting for the upcoming week. You got Microsoft, Apple, Google, Amazon, Meta. You got 5 of the Mag 7 reporting earnings this week. And Mark, when you look at, everybody knows the importance of these companies, Chucky. Like, this is not a news at 6 that Microsoft, Apple, Google, Amazon, Meta can all be very important catalyst-driven stocks. But outside of that, my take on earnings is not, it's specific to the numbers that we have seen throughout earnings. And when it comes to the importance of these 5 companies, Mark, when you take into account that blended growth rate right now, it's a negative 1.4%. If you remove these 5 companies from the equation, we're at a negative 10% on blended growth. And so that blended growth number could substantially move one way or the other, given the weight that these companies carry on all of the macro earnings analysis. And so you can never tell the earnings saga in an earnings season without the flagships reporting. And so we have 25% of the market reporting. We know where the landscape is from an earnings landscape. It's been bad. I give it a D+. That could go from D+ to a C+, B- really quickly if the leadership wants to come through this week. Microsoft, Apple, Google, Amazon. And so you can't discount the importance of these companies on the market, but specifically on those macro numbers that we focus on in earnings. Can the market handle a 20 multiple at after Microsoft, Apple, Google, Amazon, and Meta? Yeah, I can handle a 20 multiple if they all come through with positive earnings and they provide catalysts for the market. They provide a tailwind for the market. But if they don't, no, the market cannot handle that 20 handle. And so when you're looking at the backdrop of the market, yeah, you got the big dogs reporting this week. That all of them are going to be extremely important to the conversation. There's no doubt about that. But Mark, it's not just the big dogs this week. You have 107 S&P 500 components, and there's a couple spaces that I think are going to be really interesting this week. First and foremost, when you're looking at the energy sector, you got the 2 big dogs reporting in energy this week: ExxonMobil, Chevron. Crude oil starting to go up a little bit, catching the 9, starting to show a little bit of bullishness on crude oil. Well, energy really hasn't followed suit from a trending perspective yet. It's starting to do good, but it doesn't have an earnings saga yet. It doesn't have an earnings story yet. It doesn't have a catch-up story yet. What it has is a valuation argument. That's what energy has right now. It's got the lowest valuation in a high valuation environment. That's a compelling argument. It's a really compelling argument if you get it on top of crude oil going up. And number two, if you get a catalyst out of Exxon and Chevron or some of the other energy components this week, you could be seeing something start to form a little bit. It's not great right now, but you could start to see it forming. And so energy's a little bit in focus this week. Healthcare is also in focus this week. If you're looking at the three spaces, if there's three spaces that have done worse than other spaces, in my estimation, I would say financial is the worst of the bunch. The financial space has been the worst earnings of the bunch. But I would also put energy into there right now. I would also put healthcare into that as well right now. Healthcare has not had a good start to earnings season. They have a chance this week because they got a tremendous amount of catalysts coming into the market this week. So it's going to be a big dog week. There's no doubt about that. There's going to be a lot of ink spilled over Apple, Microsoft, Google, Amazon, Meta. We're going to certainly lead off the halftime reports with those earnings reports. And so obviously everybody's going to be talking about them, but sneakily, I do think healthcare and energy become part of a little bit part of the conversation this week, just given the fact the leadership being reported in energy and just the amount of names that are being reported in healthcare are going to be very, there's just going to be a lot of news coming into the market from an earnings perspective in those two spaces.
Yeah, no, and I mean, we'll continue to break down earnings every day on the halftime report, but it's hardly, Matt, in the midst of all of that, that would be a week in and of itself, right? Like if you just had what you just talked about, and I mean, we would be full. But
yeah,
this week's off the charts. It really is. You have unemployment week, right? And that narrative of unemployment is always important, where you have not just the non-farm payrolls, but all the things leading up. You also have a handful of others. But in the midst of that, you got a Fed meeting. And in the midst of that, you have the Treasury making their two most important quarterly announcements of the year. And, you know, for individuals to say, well, you know, Treasury, yeah, back last summer when they made those announcements, every asset went down for the next 2 months, right? Because it sparked yields going up, dollar going up, because we were funding too much, and it gave the bond bears a chance to. So we got a lot going on this week, man. How do you digest if you're a trader when you just, from Monday to Friday, it doesn't stop?
I mean, obviously, you're on a little bit of pins and needles this week. You're in volatility playbook. You're sitting on your hands a little bit, waiting on this more important data to come into the market. I don't think you're being too aggressive in front.
I haven't heard you use that phrase volatility playbook in 3 months.
It hasn't been since I've used it for 3 months. I didn't use it in November. I didn't use it in December. I haven't used it in January. I know we're at the top end of a market. The market's doing really, really good, but I do think this week is a really, really important week. And I do think there's a lot of potential catalysts this week. And so I do think you gotta approach that with a little bit of kids gloves this week. And so I just feel like there's just a tremendous amount of data this week that we could see the beginning of new trends start after this week. And so I don't feel like this is the week you want to get too aggressive on a Monday in front of the JOLTS report on Tuesday, the Fed on Wednesday, labor on Friday, manufacturing PMI numbers on Thursday. And that's just from an economic landscape perspective, not including the Apple, Microsoft, Google, Amazon, Meta earnings analysis, which would be, in my estimation, more important than any single report this week, in my estimation. I think Apple and Microsoft's reports are more important than what the Fed says this week. I think the collection of those 5 big dog earnings reports are more important than the 5 major economic reports this week. And so, yes, if it was just this economic week, that's a big week in and of itself. If it's just the earnings landscape, that's a big week in and of itself. There's a lot of catalysts this week. And with the market being a little bit extended to the top side, showing a little bit of slowing momentum in that, I kind of feel like we're waiting on a catalyst here, and there's a tremendous amount out there. And so I just kind of feel like where the areas of the market are really kind of pumping, they're kind of already been pumping. And so it's just one of those situations where you're slightly overextended. You're in front of many, many, many catalysts. I think we have a much, much, much better understanding of where this market wants to go following this week than what we kind of understand going into this week. So I do think volatility playbook makes some sense going into this week. But I also, but Mark, you also know I have concern about earnings season, and I do think the market's priced for perfection. And if you don't get perfection this week, you could see a little bit of downward, more than just a simple downward drift in price.
No, it's one of those situations, Matt, where bulls are in control of the narratives, right? Inflation isn't causing a trouble. Goldilocks, soft landing is in vogue. Nobody's worried about recession. Maybe the speed in which they're in control of the narratives.
Well,
but if they
should be in control of the narratives. Inflation's under 3%, GDP's north of 2.5%. They should be in control of the narratives right now. The bears argument of recession and end of the world hasn't played out for a while now. So they don't have that data yet. And so they should be in control of the narratives.
But when they're in control of the narratives, does that mean you can go to a 21, a 22, no, whatever?
Like, that's my concern.
And that's the thing is like, all right, everything's good. Well, how much do you want to pay for a risk asset?
I don't have concern of, oh my goodness, the sky is falling and the end of the world is happening and we're going to go through a massive. That's not my analysis. That's not my concern. My concern is we're elevated from a price action perspective. We're overextended from an indicator perspective, and we have a problem with the valuations.
Yeah.
That's my concern. It's one of, hey, if we get a correction in the next quarter, just realize it's because of earnings season.
Yeah, no, I mean, and that's, I think that's the issue is some of the nastiest corrections, happen during times where bulls have control of the narratives, those positioning and overextended coupled with valuations.
And let me just ask it a very simple way. Do you want to go chase NVIDIA above 600 right now?
No.
No, of course not. Do you want to go chase AMD above 177 right now?
No, I want to add some energy stocks down below at cheap valuation.
Okay. Or do you want to get ready for a reversal analysis on energy with crude oil starting to go up with potential catalysts coming out of energy? And so again, it's not, I don't have concern economically. I don't have concern. That's not my concern. It's just a matter of evaluation and an overextended market where you do not have an earnings theme to justify the price movement, if that makes sense.
Yeah, no, and all of those positive narratives feed into crude oil, to be honest with you, coupled with the fact that China won't stop doing stuff, and valuation makes sense. It makes sense down there. So
valuation can make sense in one of two ways. Either one, earnings has to go up, or two, price has to come down. Those are the two scenarios. We can't debate a third because those are the two scenarios. So either one, price is going to come down, or two, earnings is going to improve. Pick your one. I don't think the macro side is going to improve to the level that I think the market needed. If you'll remember, Mark, we're talking about a negative 1.4% blended growth rate number right now. What was the number I said we needed to get to justify a growth?
A lot freaking higher than that.
4 to 5%. 4 to 5%. And this is the week where you have to come through, or you got to give up that pipe dream of 4 to 5% blended growth. If you don't get that leadership coming out of Meta, Google, Apple, Amazon, it's going to be very, very difficult to see the market continue to move without the leadership. And so again, it's just one of those situations. You're dealing with a slightly overextended situation in the market. You got a tremendous amount of catalyst this week, and you're dealing with not only an overextended condition in the market, but you're dealing with an overvaluation conversation from a fundamental perspective. I think you add those together, I think volatility playbook makes sense.
Yeah, and you head into the, two of the weakest seasonal weeks of the year are the last 2 weeks of February. I just saying.
Did I hear you say season out? Did I hear season out?
Well, the damn seasonality chart's been point on for 4 or 5 months, like tick for tick. Like
one thing about seasonality here.
Yeah.
You and I have been talking. I think you and I are getting a little bit interested in energy.
Uh-huh.
Energy has positive seasonality from February to April.
Well, there we go. Listen, I don't know. For me, it feels like
it's the front run going into the summer season.
Hey, listen, and those puts are cheap right now. So not on energy, but other areas. But all right, listen, we're going to break it all down, have a full recap next week. Probably spend the whole podcast breaking down where we are after a very important week.
That's next week's podcast. It's just updating all this information. Before we move on to the next conversation, very quickly, the most important catalyst for you this week.
The treasury information.
Treasury Monday and Tuesday.
Because it affects the most assets. Yeah. Right, because it will directly impact bonds. It can impact everything else. So Monday and Wednesday, there are 2 different treasury announcements. And where's the dollar? Where's yields? In conjunction with that, just because it impacts the most assets is why, it's the most important to me.
I would say for me, economically, I would say labor on Friday, most important for me. Fed, they're not going to cut. They're not raising. We're going to get information around the edges regarding when they're going to cut. They're obviously they are going to cut. Does Powell hint towards a cut in March? Does he hint towards it towards May? Does he put it further into the summer? I think we're going to get more information on that.
Yeah, Matt, until they stop speaking out of both sides of their mouth, I don't really like the
and so I is the market going to reprice back a little bit more equilibrium with where the Fed is from how many cuts are they expecting this year? It's an important event. Obviously, it's the Fed, but I wouldn't put it as the number one this week. I actually think labor is still the number one economic report here. And so Friday labor, but you got important economic data throughout the week. What about earnings? What's the most important earnings announcement?
Well, the only reason I don't say labor, there's no way the Biden administration lets that be a negative number this year.
77 on non-farm.
Like it's an election year. There's no chance. I'm sorry, and it's nothing. And I would say the same thing if it was a Trump administration. And I would
telling me that the leaders in America would manipulate the data for their own purpose. Are you trying to make that argument here?
I don't think there is and this is not a Republican, Democrat, not a huge Biden guy, but
they all do.
Yeah, come on. China does it. They do it. There's no way. And so that's why it's like
you're telling me $3 trillion in debt in 1 quarter is going to help the labor market. Okay, I agree.
Oh yeah, so I already know the number, right? It's just, are they smart enough not to make it too hot? Because we can't have it too hot, because they got to lie at the right level.
Would you agree with one thing? Labor's been stronger, even discounting some of the froth on the labor numbers. Would you agree that labor has been significantly stronger than any economist expected?
Oh yeah, it's one of the stories of this general cycle of this time period in history.
Even with the quote unquote manipulation of the economic data, would you still agree with that?
It is higher than anyone would have thought this deep into the hiking cycle. Absolutely, 100%.
Even baking into the manipulation, it's still a positive storyline from an economic growth.
Oh, absolutely, 100%.
100%. What about earnings? Earnings. What's the company you're kind of anchoring against this week?
It's not so much a company. I'm looking for a twofer. Right, because bulls need, one would say, why do bulls need anything? Look at the charts; they're in control of everything.
Overextended with high valuation bulls.
Exactly. Well, that's why they need it.
Bulls need to justify their early decisions. That's what they need this week.
And what I'm looking for is a twofer.
Mm-hmm.
One of the big five, right? Because those are the ones that, there might be interesting story, but one of them to come up with something and another one to come up with a right? Now that's probably on the positive side because give them the benefit of the doubt, right?
Yeah.
But it could happen on the negative side too. I'm assuming it will happen on the positive side, but I don't care who it is because one of them can be crappy, right? And Apple and Amazon, anyone that where the market's like,
last quarter, Apple was crappy. The rest were good. Yeah.
And so one of them, but one of them to be like, yeah, and then another one to say, yeah, right. And, that could give the Bulls what they need to hold, right? To hold. Because I think if you're a Bull, to be honest,
you're thinking not just one company. You're thinking, okay, I need to see these macro numbers Matt is not geeking out about improve. And it's the 5 big companies that have the best ability to improve the macro backdrop. Is that kind of what you're one question you want?
Yes. And so do you get that 1-2 punch, right? If you do, right, I think if I'm a Bull, I want to escape February about where we're at. I want to be in February, March about where we're at. I think that would be a win for Bulls, given the overextended valuation situation, and I think that can provide it.
Google overextended going into earnings. Meta overextended going into earnings. Apple is not overextended going into earnings. Apple's actually in a really decent multiple time frame situation. And I feel like if we break up above 200 on Apple's earnings report, that could be a really good situation for Apple. So I actually think, given the fact that Apple is the one of the 5 that has not broken out in this current trend of the market, right? Meta broke out, Google broke out, Microsoft obviously broke out. They all broke out. Which one didn't? Apple didn't break out. Remember, Apple had downgrades to start the year. The rest of them didn't. And so Apple's fought back up to that high. And now you got a really compelling multiple time frame situation on Apple. I think out of the big 5 this week that are reporting, I think the number one I'm looking forward to is Apple, not just because of the Apple's importance, but also because of the storyline that Apple has provided this year, and they have a multiple time frame situation, whereas the rest of them don't. So Apple's on the radar a little bit this week because of the multiple time frame conversation and the storyline that has been going on for the first 3 weeks of this year. But Mark, I'll tell you one off the radar. It shouldn't be off the radar. It's on everybody's radar, but not one of the Mag 7. I'll tell you the one that I think is probably the most important report this week for the growth areas in the market, and that would be AMD. You got 2 AI stocks that are just head and shoulders above the other stocks.
That's a good call. That's a good call.
That's NVIDIA. NVIDIA doesn't report this week. AMD does. And so I would say quietly, AMD, you want to talk about being priced for perfection? In the quarter, AMD, 100 to 177.
AMD is priced for the second coming,
Armageddon.
There's priced for perfection, and then there's
AMD. And then there's AMD.
So let's just call a spade, right?
So AMD can justify a lot of this, but Mark, it's not going to be based on EPS and revenue. AMD's got to provide pretty decent guidance on this one as well. So I would say AMD is the most important report, not named anything in the Mag 7, but I would even put it with the importance of the Mag 7 going into this week. I think AMD.
That's a good call. No, that's a good call out just because of, that's
the AI connection.
Yeah, the AI connection, the theme, and all that.
Well, they're starting to eat into a little bit of the NVIDIA, just one-man ship. They're starting to be a part of that conversation a lot more. So it's going to be important. But also, AMD's got like a 12,000 PE ratio. Right?
Yeah, there hasn't been a chart remind me of the silliness of 2020, early 2021 for a long time until this chart. And
yes, AMD's gone on.
And this reminds me of that silliness. And remember how all those charts ended. I'm just going to say, Just gonna say.
I
So
hear this from I hear this from the Bears all the time. Remember 2000? No, just
no,
always.
2020, 2021. I'm not even talking 2000. I'm talking about just a few years ago, right?
Yeah,
Um,
I get it.
so all I'm saying is AMD better, get some chips inserted in your head real quick. That
I know, but Bears shouldn't talk Andy yet.
yeah, that's
No, you
what's
should. No, not no, no,
well,
no,
well, Bull shouldn't talk AMD either right now. I'm just
no. Nobody should talk AMD until after earnings report. Like we'll talk about AMD post earnings. Obviously, we'll talk about
but
it.
all right. So, all apologetic to the stock obsession. Oh my goodness, there's only equities. There are some absolutely massive other markets. Let's do a quick run around them. Let's talk
Yeah.
Bitcoin. Let's talk crude oil. Let's touch on gold. I even want to touch upon bonds real quick. But let's start with crude oil, Matt, because that thing looks ready for prime time, doesn't it?
It certainly does. And when you're looking at the energy space, a lot of times when we're talking about crude oil, there's a secondary conversation happening in the energy space. And when you're looking at the energy space, I just want you to think about one thing as we're going into a really important week for energy as well. You both have crude oil breaking out of its 200-day moving average, finally showing a little bit of bullish momentum. And you also have energy starting to show a little bit of that catch-up philosophy that we talk about quite often. And you're in a catalyst week from an earnings perspective with energy. And so it's obviously going to be on our radar as we navigate the next week and a half or so. But a couple things here very quickly. The average price of oil this quarter, we're going to have basically, if energy companies start moving here, it's not going to be based on earnings this quarter, Mark, because you're going to have earnings that are fairly bad against, where the backdrop is right now, given the fact that oil was 5% higher last year, this quarter, than it was this year.
So you're going to see declining revenue numbers at a minimum.
Exactly. So that's what we're going to see in their earnings reports is declining revenues, maybe not year over year, but slightly, paltry numbers, nothing to write home about. They're not going to spark any excitement. So why are we going to be talking about energy? Because think about it. The problem with their fundamental reports this quarter is going to be the average price of oil year over year is down 5%, correct? Mm-hmm. Well, what happens to those same revenues, those same EPS numbers next quarter and the quarter after that, if crude oil starts to do what we kind of anticipate, a little bit of up. And so you do have finally, after you and I discussing crude oil for what felt like 3 months, it was really kind of about a month and a half, but you're finally getting a little bit of resolution to the reversal saga that we have seen play out in crude oil, and it looks pretty
and good. The reversal saga referring to the technical setup, this beautiful base that has formed.
Yeah, and it's formed a really good base over time at the low point. Now you're starting to see momentum play out on crude oil. And the ultimate question is, A, if oil can continue to punch up, and it certainly does look like oil wants to continue to punch up here. Do we, and I said this on the halftime report earlier this week when we caught the 9 on the first day of the catching of the 9 analysis, I said, well, the only question I have is this day 1 of 10? Is this day 1 of 20? Is this day 1 of 30? Yeah. Is this day 1 of 40? And it's right now day 1 of 5. That's where we're at right now in the saga. And so it's got a compelling argument too. You do not have a compelling argument right this very second from a supply and demand perspective. What you do have from a supply and demand perspective is a basically equilibrium, given the fact that you have some demand concerns with the global economy, not the U.S. economy, but the global economy. But you also are trying to offset that with the supply side cuts out of Saudi Arabia and OPEC in general. But one thing that we've been talking about that can have a little bit of a bullish catalyst here is the geopolitical situation that is occurring in the Middle East. As we speak right now, we've seen a lot of the activity between the U.S. military and their allies and basically Iran and some of their proxies out of Yemen and whatnot with the Houthis is you're seeing an expansion of those military conflicts. And as we speak here today, it's a Sunday. We have not seen the futures open yet. But as we speak right now, Mark, we have just reports coming across the wire just barely that 3 U.S. service individuals have been killed in a strike in the Middle East right now. And you're starting to see a lot of political pressure. Just, it's early. It's on a Sunday. We haven't seen the futures open. This is just happening right now. But you're also starting to see a lot of political pressure being put on the Biden administration to respond against Iran, specifically with those 3 military service individuals with their casualties here today.
Well, I mean,
Very sad
obviously our
story.
heart, yeah, our hearts
Very
go
sad.
out.
Very sad story. Love our military personnel. We love and support you guys in every single capacity. Stay safe, stay strong. But that is that's an ongoing situation. And so if you're looking at equilibrium from a supply and demand based on lack of demand global economically and offset that with the cuts out of Saudi Arabia, well, the tiebreaker here could be the geopolitical situation heating up a little bit. So you've got some front running of that going on right now. Now you're seeing a little bit of more activity. So I do think, just from an oil perspective, that if the Middle East is going to get a little bit hotter, you're going to see oil prices get a little bit heavier.
Yeah, no, and it's one of those things. When you analyze the situation, dead Americans is going to be a political rallying cry that is hard to fight.
It should be,
and rightfully should be.
We should do everything we can in every capacity to protect our military men and women across this globe.
And so it is hard not to see, just stepping back from the human side, stepping back from the patriotic side, just from the cold-blooded political aspects of it, Matt. Yeah. And so just from that aspect, I have a hard time. How do you not escalate it in a presidential year when you're going to have pressure on you and the moral high ground to do so?
To me, it has nothing to do with the election year. Military personnel were in danger. They were in danger based on actions out of third parties. Those third parties, you need to put a deterrence in effect. And that's how I see it. I see it as very analytically, say it's heartless, say it's cold, but that's how I see it. And so I don't see it as
there has to be a response, whatever the thing, one way or another, right?
1000%. The best way to respond, the best way to put a deterrence in is to drop bombs. Yes. That's
and just from a, once again, cold-blooded market perspective, that is beneficiary to gold, that is beneficiary to oil.
I think I'm very similar to a lot of people that I do not want to see an escalation to the military conflict in the Middle East. I hope and pray for a peaceful resolution out of the Middle East. I maintain a positive philosophy towards what we as a society can accomplish. But there's a reality to this story as well. And I think it's important to understand the reality of the situation, especially when you're talking about the impact on the financial world. And if you're going to see an escalation in the Middle East from the moment in early October, was it October 9th? Am I getting it right? Okay. From the very day of October 9th, the conversation on oil has been about escalation of military conflicts, and specifically with Iran. And the analysis on oil was, as long as it does not expand into Iran and further,
it should not have a market impact.
It should not have a market impact. But if it does,
you and I mean, yeah,
you're going to have a market impact. And I'm right there with you, Mark. When these types of storylines hit the wire, my first instinct is just, my heart goes out to the families. My heart goes out to their loved ones. I pray for them. You're in my thoughts and my prayers. But there is an economic reality here, and that's also why people listen to us on the podcast, is for the economic reality of a situation. And so again, I just see that we've seen it expand in the last week and a half. And as you've seen those conflicts expand in the last week and a half, you've seen oil start to offset that demand concern. And now you're starting to talk about real momentum in oil right now.
Yeah, no, technical fun. And the thing about it is, Matt, I've been making this case for oil with the geopolitical tensions as a kicker, right? Strong US economy, stimulus to China, OPEC doing what they can to balance the market.
Oh, and we didn't
Ex,
talk about China this week.
you know,
China
ex,
did everything
yeah,
in their power.
yeah, and so there has been a case I have believed in oil, especially in the context of a large sell-off coming into an important technical area. That's been my case, right? But in the back of my head, and something I say in passing is the kicker here is something, the case is there without
Yeah.
Mideast tensions. That is one of those, well, that could,
Improving economic condition globally, led by the U.S. economic, stabilization, I would say, on top of the Chinese stimulus. That's a bullish, plus OPEC cuts. That's just based into the argument. That is a bullish case without the geopolitical tensions.
Yes. And so then you have this. It's going to be interesting to see the price action. Price action to Middle Eastern events has been very sporadic. But but make no mistake about it. If this thing escalates, oil's going to $100, in my opinion. And in Mountain Dew markets, Matt, it can happen really fast.
But if oil goes into 80, 85, I don't think that's going to really move the needle from an inflationary perspective. But if you do get real escalation here, not just headline escalation, but if you get real escalation with the U.S. and Iran, you could see oil at $100 a barrel. And if that's the case, central bank's not going to be talking about cutting rates in March.
It's not an important chart from outside of oil today, but it's one of those that can become an important. It's on the radar. You got to be aware how this situation could potentially be playing out. And when you couple in, Matt, the fact that a lot of the shorts in the market are in energy, the underpositioning in the market is in energy.
I think that's a big point. Not so much the shorts, but that's obviously that can be a bullish catalyst. But I do think energy, as of right now, is underrepresented.
No,
based on what we're starting to see.
Man, it's like in the 98th to the bottom percentile.
Number
who needs that boring
I feel
energy?
Like you and I and two dudes
there's a guy at the bar that is like, oil, and then us.
Everybody else is talking chasing AMD and Nvidia right now. To me, those trends are done.
Dude, when everybody knows it,
short term.
How much opportunity is there when everybody knows something?
And they're trying to take the last drop of juice out of that orange.
Yeah, listen, I get it. AI is cool, but
And again, I'm just saying that the short term trends in front of specifically AMD's earnings, but I just kind of feel like what you just said can start to add on. It could be a really good tailwind if you start getting catalyst out of energy, whether that's out of the Middle East or whether that's from an earnings perspective out of Chevron or Exxon this week.
And the thing about it is, one of the reasons you and I spend so much time on macro analysis, on charts and this and that, is that when you identify something, oil's been a great cash flow position for me for 2 months. Just tremendous returns for capital allocated. What's nice when you catch these structural things is they can provide 6 months worth of trades potentially, right?
You're right on the macro. It makes everything you do on an application perspective, day in, day out, so much easier. You know what areas of the market to focus on, kind of where to navigate in the market, when to start tapping on the brakes versus when to push on the gas, because and again, if you have the macro right, and you believe in the rising tide theory, then the application side of it gets a little bit easier in my estimation.
Yeah, and another area, and I don't know what to do with it today, is bonds, and just focused on the yields and dollars chart. Massive week, right? Massive week coming up. Lots of catalysts, lots of this. And those charts feel like they're into go or don't go type patterns, right? Let's either take a leg up or let's not.
Yeah, if it was a swing trading stock, I'd say you're in a K trade situation.
Yeah, like and they just happen to be two of the biggest, most important charts in the world.
Don't
Like,
don't you think for the K trade to work, you got to have bonds move on a catalyst one way or the other?
they got to have something
They
where
got to have
it's like
more than we know
like
right.
where Jay Powell, and I can't imagine him doing this because I haven't seen this Jay Powell in a year and a half, where he's actually like comes up and scolds the market, right? I don't think he'll do that, but
I'd be okay with the scolding right now. I'd be okay with the you do a little scolding, Jay Pal. I think the market's getting a little frothy.
and does he break out that voice, right? I haven't seen it. I didn't see it last year.
Bulls. I don't. But I would also rather enjoy consistent trends throughout the year instead of V-shaped up, V-shaped down all year long. Like that's what happens when you get the markets to be a little bit out of control. And it does feel like there's certain segments of the market that are a little bit, they have broken away from their fundamental backdrop.
Yes, they have, and does Jay Powell say something? So that could be a catalyst. Another catalyst could be.
Can we stay on Jay Powell real quick though?
I'm just having a pleasant podcast,
If Powell is looking at the broad market, right? I don't think he has to have a strong opinion on the broad market. I mean, when you're looking at RSP, for example, RSP hasn't done a thing all year long. It's done not one thing. It's been a little bit down and then a little bit up. And you enter the year at 157. You're currently at 157 on RSP. That is the equal weighted index. But if he also wants to be like, hey guys, you might be taking Taiwan Semiconductor a little too far, and you may be taking AMD a little bit too far, and you may be taking Nvidia a little bit too far. Slow down. That AI is not going to change the world in 3 days, guys. It's going to take a little bit of time, and it's going to have some ups and some downs in it too. So if it depends on Powell's focus. Does he want to focus on the broad market? I think he has all the ammunition to basically say nothing, basically, right? Let the market do whatever interpretation they want. But if he is concerned about technology specifically getting out of control from a bubbling perspective, because listen, I love AMD as much as the next guy. I've been talking about AMD since 2005, but it's got a PE ratio that's through the atmosphere right now. It's completely disconnected from any semblance of current fundamental reality. And everything we're doing with AI right now is building no worst case scenarios. Everything is best case scenario for AI right now. And so if he wanted to focus on that singular aspect of a market that could be seeing a little bit of bubble mentality, because bubbles are not good for consistency in the market, yeah, I think he might want to talk it down a little bit, but I could see Powell doing one or the other, either one. It wouldn't surprise me.
Yeah, I know. And so that's one scenario, right? Where you could break out of this little K trade, go either way scenario with the dollar. Another is that one of the things that bond bears set up so nicely last summer that they carried through the risk assets everywhere when yields just went through the roof was the U.S. is borrowing so much money, blah, 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 which is true.
Very true.
That it's going to create supply demand dynamics, and it's going to require higher yields to attract buyers of that debt. It's a sensible argument, right? If you are going to spend like a drunken sailor, well, you're going to have to incentivize people to buy that debt. And how do you incentivize them? Well, higher yields, right? And it was the kind of the rallying cry for bond bears to send yields higher, even with the Fed kind of signaling that they were done. Well, this week, the Treasury issues how much money they are going to need for the company. It's their quarterly refinancing documents data. That if it is an outlandish number, right, higher than expected, Could it
Yeah, okay.
trigger breaking
Big
yields?
number.
We know it's going to be a big number,
number.
but is it an
I thought,
outlandish number, right? Like type thing.
well, outlandish to us normal human beings, yes.
Well, yes, it's all relative, right?
Outlandish to the market, I'm not certain about that. But man, $3 trillion in debt in a matter of 6 months. That's big numbers.
Yeah, I know. And so, I mean, there are catalysts out there this week that could make, and let's say, the catalysts can break either way, right? They can break either way. Janet Yellen is a very adept actor in this saga. In all seriousness, I like to make fun of Janet Yellen. I think she's also evil, but she is not incompetent. She's very aware of market dynamics, right?
Listen, if you think Janet Yellen's incompetent, you don't understand how a puppet master works.
Yeah, you call someone evil, that's a compliment.
Well, in some circles.
Well, at least in this context. Yeah.
She's a power broker.
She knows the game very well, and so she's going to know how to, because she does not want higher yields in an election year.
No, I think she's got the dirt on Powell.
She does not want higher yields in an election year, and so will she make those numbers?
Question, and be dead serious, no sarcasm. Who answers to who, Powell or Yellen?
Powell answers to Yellen.
Yeah, I would agree with that.
Janet Yellen, she, I like to joke she's the most powerful person in the world, but she's pretty damn powerful.
I'll argue.
Like, she is a pretty powerful, individual.
President of the United States, head of the Treasury of the United States, or U.S. Central Bank chairperson. They're all up there. They're all up there. But I would say Yellen is probably the biggest power broker out of those three right now.
I think so. And so, needless to say, we have catalysts this week that can break the dollar yield out. Matt, isn't this week one of those weeks where it's like, do I trust the first move of things when the next move could bring a whole different set, right? I mean, it feels like one of those don't trust the first move type weeks.
I'm not going to trust it till labor prints on Friday.
Yeah, I mean, that's kind of where I'm at too.
That's where I'm at.
Like, first move, oh my gosh, and then you have
especially anything on Monday and Tuesday. Like I wouldn't trust much on Monday and Tuesday. You start getting into the heavy stuff on Wednesday, Thursday, and early Friday. But no, I think it's a week of weeks for a reason. And I think when you have something with the potential catalyst of this week, I think you're trying to get an understanding of where the week is at the end of the week, not the individual storylines. Don't get me wrong, it's going to be a volatility, it's going to be a good day traders week, but I don't think this is a week the swing traders are excited about. No.
I wouldn't.
I think swing traders get excited next week after we see different patterns develop following this week.
Yeah, hopefully you get some it's just a big week. And then of course we got Bitcoin, Matt. Well, let's touch upon gold real quick. Gold's been in this cash flow pattern with the escalation in the Middle East as a potential and all of these. Like, what are you looking at here on gold? Because it seems like gold's been in a slumber for a while, which probably isn't a bad thing since that slumber has been above 2,000.
Yeah, I don't think so. I think it's a positive thing.
Yeah, it's been in a slumber.
Above 2K was the argument, and we're seeing it play out. How can we think it's negative?
Because AMD's chart's going 8,000 miles an hour, and so
you're right. Growth is going 8 million miles an hour, which typically would send gold underneath 2K here.
Which I think it's constructive.
You would with the market doing what the market's done over the last 2.5 months, Mark. I'm sorry if you're not downright absolutely impressed that gold is stabilized above 2K. I am so impressed by this.
Yeah,
about one of the biggest bullish moves the market has had in the last few years post pandemic. And gold stabilized above 2K, and this is as good as you get with that type of parabolic move in the market.
Yeah, no, it's one of those things where you go through every asset class. It is the asset class I ended the weekend more bullish on than I started the weekend, because I've been kind of
That's an interesting point, because I got more bullish on gold just in the last 5 minutes of this conversation, honestly. And I'm not being facetious or sarcastic. I'm dead serious. The more we're talking here, the more I'm getting bullish on the asset.
Yeah.
2K's holding, and this is all about 2K holding here. But if you start, this is an if A then B. I'm getting a little crabby against the bullish uptrend in the market.
No.
Right. I mean, that's not news at 6. Anybody's listened to my earnings analysis over the last couple of weeks. I do think it's important to get that earnings ship turned around very quickly. And if it doesn't do it this week, I think we could have a little bit of a correction going on. And if you're gonna see a little bit of a pullback in the marketplace, especially the top, I'm not talking about in general in the market. I'm talking about the froth at the top. You could see a little bit of bullishness happening on gold in that environment. And if you do see geopolitical situations heat up, that would spark a little bit of fear in the Middle East. That would be a catalyst to buy physical gold for many, many, many institutions and individuals around the world. And so, yeah, both of those could propel to be bullish catalysts. I still think this is a post this week conversation.
Yeah, so do I, because you do need to see what the dollar does. When the dollar is in a pattern that could potentially take off, you have to respect that, right? You have to.
I haven't really thought much about the covered call on gold or GDX instruments recently. It's just been really easy. It's like, cover it. If it's there, cover it, buy it back, cover it, buy it back. It's been a really simple conversation on the management side of it. But I do think with the combination of events this week, with gold kind of at that low point, starting to show a little bit of bullishness. It's not bullish, it's still neutral, but you are at the low point in the neutral chart. And GDX, Mark, is at a level where you could start to see reversal scenarios occur.
Yeah, absolutely. It's sloppy, but you could, it's not clean, but you could see it, right?
Would you be surprised if 27 is the low point in this?
No, of course not.
No, either would I. So I do think GDX gets on the radar.
Oh, they tried to hammer it at the start of the year, right? Algo's like, oh, we're going to hit this. We're going to hit these things. And it's fighting back. And when things start fighting back, bulls tend to, in that area, have a good batting record.
Where GDX, what's your number right now? Mine's 29.
It really comes down to the dollar. If that dollar breaks down,
where are you covered? Where would you cover?
Oh, I'm covered at 30 and 31 right now.
Okay, so I'm a little more aggressive. Okay.
Yeah, I'm in the mood to pick up token cash flow, but that's it. Because I mean that's what I do. Is I always take the money and then reevaluate later. But
I like the 30 call out. I think 30 is a good number too.
But if the dollar does not break out by this time next week, I would start, if I didn't own GDX, I'd start adding some, to be honest with you.
If the dollar does not break after all the events this week, I think we can start, and we got more constructive patterns at the low point. I think we can start being a little bit more aggressive on the GDX analysis. Yeah,
I think you can. I think you can. And it's just, once again, it's not a bad freaking hedge against general portfolio volatility.
Gold is the best hedge against portfolio
volatility.
Listen, if you got some concern about the market getting too frothy right now, and you got gold at a low point in the trend, maybe you don't make it complicated there.
Yeah. And so, and then finishing off on Bitcoin, I don't have a lot to say. The little power punch back on Friday. Oh my gosh, we're great. But it just feels like an extension of volatility to me. Do I trust it? All I know, if you don't get a follow through on the rally to start the week, you're going a lot lower, in my opinion, right? You punch back on Friday. If that doesn't hold, you're going lower.
Well, so, I think you got it as a bearish retracement right now. Bearish retracement, and in bearish retracement analysis, there's always going to be those key levels of resistance that if you hold, the bears get more confidence, and if you break, the bears go look for something else. And
I think you're exactly at that moment to start the week.
I think you can call it right around 43, 42.5 to 43. You got the 20-period moving average, I believe, right on top of the price action, right north of 43. You got an old pivot point, a lot of data around 42 to 43. So I would say you're at the point in the retracement where if you're looking to short Bitcoin, and I am not, but if you are looking to short Bitcoin, this is the level you're saying, hold, you short because you're at a go or don't scenario. And whenever you're at a go or don't scenario from a trader's philosophy perspective, if that does not go, you don't try to come back the next day and be like, ooh, do I got it now? No, you got to wait for different pattern development at that point. So I still think we're in general the buy the rumor, sell the news. I still think we're kind of going through that process, but technically speaking, I said after the event with the ETFs release, this becomes a technical saga. And as of right now, you got this labeled as a bearish retracement. And I think we got, again, going into a week scenario, I think we got a lot better perspective following this week on Bitcoin than before.
Yeah, absolutely. Absolutely. It's going to be a big week. Next week's podcast is going to be really interesting. I do like that both of us are on the go fishing for a couple days, piddle around, wait for this to play out a little bit, with maybe the exception of crude oil and energy stocks to start the week. Is that pretty good synopsis?
Yeah, I think there's some setting on the hands going into the early week. I think that for me, the most important events this week are going to be on the earnings side of the equation. I don't think the central bank's going to have that many fireworks here this week. Mark, the average, when you look at the average performance of the central bank, the stock market on central bank announcements over the last 8 announcements, the market moves less than 1%. On average. So it doesn't really perform better or not lately. And so it's one of those moments with the central bank where they're not really going to shock the world here this week. And so it's going to be an important conversation, but I do think the earnings conversation is more important than the central bank conversation. Plus, I kind of feel like we got the central bank's announcement already with the ECB last week. I think they got all their marching orders from the Bank of International Settlements, and we're just seeing that play out individually, one after the other. I mean, I've covered 4 central bank announcements in the last week and a half, Mark, on the halftime report, and it was all rinse and repeat, not the exact same phrasing of everything, but the exact same message of everything. And so I kind of feel like we already know what the central bank's going to tell us. You don't know what version of Jay Powell you're going to get, but I do think the most important events this week are the earnings coming out of Apple, Microsoft, the big dogs out there like Google, Meta, Amazon. And then I'm going to throw AMD into that bunch as well because of what it represents in the AI saga as of right now.
Yeah, and I think Janet Yellen's going to deliver one for bond bulls, equity bulls, and all that. And how do equities perform?
Janet Yellen has to be the strongest. She has to be the biggest bullish supporter in the world right now.
And she wants everything up except crude oil.
Up except crude oil, but she might not have anything to do with that.
Well, that's the problem is all of her other things. Well, there's consequences even for the evil emperor. One of those is creating financial conditions that I think are supportive of crude oil. Because you got a falling dollar, falling yields. That's also supportive of crude oil along with other things. I think Janet Yellen, I will be shocked if yields in the short term make a strong move up after this weekend. But we'll see how many trillions of dollars.
You're all over that Monday, Tuesday treasury.
I am.
You can't even talk. You're just like, this just.
The pure financial geek is coming out of me, But that's also supportive of oil and gold as well. So I don't know exactly how to play equities at the valuation levels they're at. I think there could be some supportive things for crude oil and gold this week. We'll see how it plays out. But Matt, enjoyed the podcast as always.
Me too. Enjoyed the conversation. Appreciate it. And hopefully everybody is fully aware of everything we have coming at us in store this week. And You know, it's going to be a big week, but every single day on the Halftime Report over there on our Tackle Trading YouTube channel at 12:30 p.m. Eastern Standard Time, we do the Halftime Report, and we cover all these events every single day as we navigate the markets with our community. And if you want to come over and join us in the Halftime Report, you're more than welcome to come join us each and every single day, 12:30 p.m. Eastern Standard Time on the Tackle Trading YouTube channel. While you're there, subscribe to it because we'd like to go live every day.
All right, everyone, have a fantastic week. Email me at Team at Tackle Trading if you need anything at all.
Later, team.